Hi, this is Shelley from CP Mortgage Team, powered by Nexa. I wanted to discuss today a little bit about what's happening in the market right now because I'm constantly getting phone calls because buyers are going under contract, they're starting the underwriting process, and shortly thereafter, or almost to the end of it, the loan is getting denied. Part of the reason why this is happening is because most of the pre-approvals that people are getting are not true pre-approvals. A loan officer, by their license, is not able to approve a loan. Therefore, we are not able to pre-approve a loan. Only an underwriter can approve or pre-approve a mortgage or commitment to loan. Now, the forms that most people are getting are not actual pre-approvals. They're going to look something like this. And this is actually a pre-qualification. What this is, and you'll notice that a couple different things. Number one, it has my team's logo on it. Number two, every time I produce one of these, whether it be a pre-qualification or a pre-approval, once I get it from underwriting and transfer that over, I always show what's happening with your property taxes and your homeowner's insurance. And this is very important because your property taxes and your homeowner's insurance are being divided by 12 and have a huge impact into your qualification for a mortgage. How much is it going to cost you per month and how much is it going to adjust your debt to income ratio? That makes a very, very big difference. So if we change it by as little as $2,000, that can reduce what you qualify for by as much as $10,000. Same thing with your homeowner's insurance. Every area is a little bit different. Up here in Pennsylvania, your homeowner's insurance right now is about $1,500. It might be a little bit less, may come in a little bit more, but you want to plan it $1,500 per year. Homeowner's insurance in Florida, much more expensive. You're looking at about $2,000 to $2,500, depending upon the area that you're in and whether or not you need flood insurance as well. Parts of Pennsylvania had the same thing as well. Now, what makes this not a pre-approval, even though it looks nice, it has the date, has some basic information, says that we went through everything. There is no expiration date on this, and there is no borrower-specific details as to what is needed for this to get approved. That's very important, right along with your property taxes and your homeowner's insurance that I'm estimating, because both you and your realtor need to know what I'm factoring into that monthly payment. If we drop the property taxes by about $2,000, let's say you find something, that's going to increase your buying power. Now, what a pre-approval actually looks like is this. So this is the lender, because I'm a broker, so therefore I do not fund the loans. I help figure out which lender is going to do the best job for you. Out of over 160 lenders, only about 15 of them do full underwrite pre-approval. That's a big deal because that's a true pre-approval. So this pre-approval, there's no address on it, doesn't have to be to get a pre-approval, has the expiration date. Very important. You need to know how long your rate is locked in for, how long the information is going to be considered for your pre-approval. A lot of these things are, standard. Once determined the subject property, encumbrances, subject property, because we don't have one. So those are a little vague. However, once you start getting down into the second page, it says the borrower provides signed letters of explanation regarding any address variation. And there was an address that they had, and it was specific to that specific borrower. We were missing W-2s. They weren't legible. They were there, but not very easy. Screenshots don't work very well. Hourly rate, again, these are very specific requirements for one buyer. And it says it's a conditional underwriting pre-approval. That is going to be on every real pre-approval. Now, a lot of people will sit there and say that they can do a pre-approval because they're a loan officer and they ran it through AUS. And what AUS is automatic underwriting, which helps you to know what's going on. However, the problem with AUS is it's an automatic underwriting system. So here's what one of them looks like. It's approved eligible, and it shows you the basics of the housing expenses, the total expense ratio, total loan amount, what state, very blanketed, open, still not case specific for this specific buyer. The problem with this is if I miscalculate your income or any loan officer miscalculates your income, we can get this very easily, but doesn't mean it's going to pass underwriting. In no way, shape, or form is that a pre-approval. This is a pre-qualification because based on my analysis of your documentation and the information that you provided, you're going to qualify for this loan. On top of that, this right here, there's nothing on it that would give a seller's agent a reason to pick your loan, your offer more than another, versus if you have this and your realtor understands what this is, this means a faster close because all your documents are already done. This means an easier process. This means less delays. This means that an underwriter has physically looked at everything that you have, and with the exception of the couple of additional items needed, you're approved. All we need is the appraisal, title, and we're good to go. Hope this helps explain the difference between a pre-approval and a pre-qualification and why so many things blowing up as soon as they get into underwriting. The fact is, your underwriter is the only person who can approve your loan. The underwriter is the only person who can do a pre-approval. If you have any questions, as always, feel free to reach out to me at any of these contact information.